Hey everybody, how are you? I hope you're doing well. It's Friday. It's been one heck of a week. Really good things happening. Crazy building industry right now. And for context, today is August 7th, 2020. So I want to talk about financing a spec home. I know that is a huge question. I've been asked that question a lot. Unfortunately, there's no magic formula for it. If you're just going to be starting off, that's probably one of the biggest challenges that you're going to face if you're wanting to do a spec home, is getting the financing for a spec home. So I'm going to just hop in here, talk about my consulting service that I offer. Just had a conversation with somebody yesterday. It seems like our initial phone calls are about an hour. We've got a lot of things to talk about, introducing ourselves, spitballing ideas, just kind of covering a lot of stuff. So it's $75 a month. And basically we can have those phone calls whenever you want. And whether you are just thinking about doing this in the future and want to start getting ideas, or whether you're into it now and you need motivation, you need support, you need somebody to bounce ideas off of, any which way, we can do it either way. But you can email me. I'll put my info in the details of the video and we'll go from there. Number one, it just doesn't seem like most banks are interested or want to do it. And this goes back to 2006, 7, and 8 when we had the housing market crash. So there were more lenders doing spec home lending then, but after that happened, there were a lot of them that just said, you know what, been there, done that, we're never going to do it again. Or if we are going to do it, we're going to be a lot more cautious about it. So when it comes to building a spec home, there's two different ways. I've had people that are basically, they're going to go out and they're going to get a construction loan like they're building their own home. Maybe they own a home right now. They're going to get a construction loan to build another home. The bank thinks that they're going to be selling their existing house when the new build's done. But what if somebody comes along and they want to buy that house, that spec house, or that house you're building for yourself when it's done? Well, then I guess it's a spec house, and you sell that house and you would try and do it again. So that would be that. I've heard of people doing that. If you're doing it as a business, and if you do it that way, what I just talked about, you're probably only going to be able to do it once like that. But typically you're going to need 25% down, because it's going to be a commercial loan. So you're going to have a little bit higher of an interest rate because it's a commercial interest rate, and you're going to have to put down 25%. At least the bank that we work with, anything we want to do, if we want to buy a lot or group of lots, or we want to build a spec home, they're requiring 25% down because they want some skin in the game, even if you own the lot. So say you went and you bought a lot last year and you own it free and clear now, I would still plan on having to come up with 25% of what the build cost is to put down. Now, if it were me going into the bank, I wouldn't just come out and say, yeah, I know you're going to want me to put 25% down. I don't want to put 25% down. So I'm going to throw out the fact that, I do have a lot that I own free and clear. It's got 60, 70, 80, 90, whatever you paid for it, it's got equity. So is that something that the bank could use towards that 25% down? Or maybe, instead of having you put down 25%, because you own the lot, maybe they could have you put down 10%. And then they could use the remaining equity in the lot. Or, maybe you own a lot free and clear, and you've got a house that you've got a lot of equity in. So maybe you could do some type of a personal guarantee where you're saying, okay, look, this is what I have to put down. I've got $10,000 to put down, but I've got $40,000 in equity in my house. I can do a personal guarantee with that. And I've got this lot that I've got equity in, because you want to try and make it work. I mean, again, this is going to be one of the more difficult parts, is getting the financing for the spec house. Unless you've been able to just save up the 25% of whatever the total build cost is, then, you know, that's the way that that you're going to need to do it. So when it comes to financing the spec house, that's typically what they're going to require. And not all banks are going to do it. You know, you may have the 25% down, and if a bank doesn't want to do a spec loan, they're not going to do it. So it might take meeting with a few different banks, and this is going to help in a couple of different ways. You're not only going to be able to find the right bank to get your spec home lending through, but once you want to do another one, you've got that lender now that you've worked with, or once you've got a customer that wants you to build a home for them, now you've got a bank that you know will approve you as a builder, and you can send that customer to the bank, and you know that bank does construction loans. So you're going to make it easier for the customer, which makes it easier for you to be building the house for them. It's just a quick little side note. The easier it is for the customer, the easier it is for you to build the house for them. And that goes for all aspects of anything and everything that they need to go through prior to committing or well committing to you. So that would be one of the things you're going to need to do is I would recommend talking with credit unions and smaller local banks. Banks like Wells Fargo, Chase Bank, US Bank, they're not going to be doing it. And I guess I don't know that 100% for sure, but I'm 99.9% sure that they're not going to do it. You can talk with them. It would probably be, you know, a little more difficult than being able to deal with a more small local bank. So basically a bank that just maybe has 4 or 5 branches in your area, or same, you know, credit union that's got 4 or 5 branches in your area. So that's kind of what you want to be looking for when you're going to be meeting with these potential lenders for you. The other option is somebody could personally finance it for you. So I've come across a couple of different people who own lots that have said they are willing to not only front the lot, so basically you don't have to buy the lot, so you don't have to come up with the cash to buy the lot. And then not only will they do that, but they will contribute some or all of the money needed to build the house, because for them, their objective is to move the lot. So yeah, and it's a little risky for them because they're gonna basically hold the note on the lot, so they still own it. They're not giving you the lot, so there's not really a lot of risk there. But if they're putting up all of the money for the spec home, there's risk there, because what if you don't finish the house, or what if it never sells, or what if, you know, they're putting up a big chunk of money to finance this build. But for them, if they can do that, it moves the lot for them. So if they can put out some money, they can sell the lot, which is what their objective is. Because if you have any experience with lots in neighborhoods or anywhere can sit for years and years and years and years, and then all of a sudden one day, once a spec home goes up on it, it sells instantly. It's really funny how that works. And even a trouble, you know, corner, awkward lot that you can't fit anything on, you design a house for it, you put it on the lot, and it sells instantly. And the reason that is because when somebody they're out there and they're shopping for lots, they're looking for lots, and when they're looking at lots, they're pulling up to the lot, they're looking at the lot, and all they're looking at is the lot. They're looking at this ugly corner lot, and it's wooded, and they just, no way, this lot is not going to be good enough for me. It's not going to have a big enough yard. It's awkward shape. It's going to be hard to fit anything on it. It's just not for me. So once you put a house on that lot, now the same person walks into that house and they're just amazed by the house. What a beautiful house. Look at all these windows, these finishes. I love this house. I'm buying this house. They didn't even say anything about the lot. It's not the lot anymore. They're buying the house. So that's why it is that way. So, you know, it's hard to find. I mean, you want to do your due diligence when you're looking at a lot, but if you put a house on a lot that's been sitting there for 10 years, it's going to sell. unless there's some other reason the lot hasn't been selling, like it's not in a location where anybody wants to live. But it's just funny how that works, but it does work that way. So if you can find a private investor, that would be great, because then, you know, maybe if you wanted to do 2 at a time, you could get the lending for one and you've got a private investor for the other. But how great would it be if you found somebody that owned a lot, so they're fronting you the lot, you're not having to pay anything for the lot, and they're giving you the money for the build. You don't have to put anything out of pocket. They're gonna sell the lot, you're gonna make the profit on the house. Now, because this private investor is gonna be, I mean, let's say you're building a $400,000 house, you know, maybe they're just gonna put the 25% down and they can get the, you know, help with getting that financing. Well, they're still putting down a big chunk of money, so they may not be okay with just selling the lot. They may want to take some of the profit from the house. And I don't have a problem with that. If I can't build a house, or my other option is I've got a private investor here and he wants, you know, 5% of the profit for the house, well then I'm gonna do that. I mean, I'd rather make and be able to get that first house out there and get things going as opposed to just not doing it at all. So that could be another option, is a, you know, private investor. And that, you know, I don't have a ton of experience with this. I work with somebody right now who is willing to do it, and I've talked with 2 people in the not too distant past that have said they are willing to do it. So they're out there. You obviously have to be careful. They probably have to be even more careful because it's their money that they're putting out. But if you do a good job and all goes well, then you can continue to have a relationship with them. And how great, again, would it be to not have to put anything out of pocket, and you can build these houses and take the profit without having to put anything out of pocket. So that would be another option. Now, if you're going to be financing the build, the way that it is going to work is you're going to be putting down 25% of what the total build cost is. So one thing I would suggest is if you're able to form, you're going to be getting a construction loan, you're going to be putting down 25%. And how that works is once you've got a blueprint and you've got a detailed budget breakdown that shows what the build cost is going to be, because that's the amount that you need to borrow, that's going to go to the bank. The bank is then going to take that, they're going to send it to an appraiser. Same appraiser that walks through, if you're buying an existing home and you get an accepted offer, the bank is going to send an appraiser through to walk through the home and say, okay, yes, the amount that we're borrowing, that works. That's what the value of this house is. We'll borrow you the money. They do the same thing with a construction loan. So even though there's not a house that they can walk through, they're looking at the blueprint. They're, you know, looking at what kind of floors are going to be here, countertops, what the square footage is on the blueprint, the breakdown, and that's how they're doing the appraisal. So that process takes anywhere, you know, the bank doing their construction loan process is anywhere from 30 to 45 days. And then you close on the construction loan. And once you close on the construction loan, the entire build amount is going to go in an escrow account. And that's either going to be at an escrow account at that bank, or in Wisconsin here, we use a title company and all of the money goes to an escrow account at a title company. Now, I'm going to come back to that real quick in a second. If you can structure your building contract and talk to the bank and have them give you a check at closing, and this is out of what the total build amount is, so that you can pay for building permits, blueprints, and survey work. Ideally, you don't want to have to pay, you already put down 25%, so you don't want to have to put down more than that. You want to make sure you've got money to pay for the building permit when you pick it up, because you need that to start the house. That way you don't have to take it out of pocket. Same with the blueprint. The draftsman's probably going to be looking to collect money now because he's been done with the blueprint for 30, 45 days. So you want to get him paid so that next time you need a house plan drawn up, he's going to be quick about it. So you want to get him paid. Same with the surveyor. The surveyor's already staked out the house. They've already done some initial work. You want to get him paid. Now, that's pretty much all of the work that's been done so far. So as long as you can get a check at closing to cover that amount, you're not paying out of pocket for that. So then once construction starts, all of the money is in an escrow account at the title company or at the bank, and you are going to draw from that escrow account 4 to 5 times throughout the building process. Here in Wisconsin, once we backfill the foundation, or if you're just doing slab on grade, backfill the footers, that's when we take the first draw. We pay the excavator, the concrete wall company, anybody else that's done work up to that point is going to get paid. And then the way that we structure it is we actually have the title company, we tell them what the full amount is that we need to draw. And then we give them a breakdown of, say we need to draw $40,000 to pay everybody. Okay, it's $10,000 for the excavator, it's $10,000 for the concrete, so on and so forth, so that the title company can see what that breakdown is. They're gonna need that. They're also, the title company or the bank is gonna go out and inspect and make sure that that work has been done before they release the money to you. Now, the one thing that we do, we've got it set up so not only do we tell the title company how much we want them to give us for the draw, or we request for the draw, they're also gonna cut the check, write the check individually for the excavator, for the concrete wall company, and then those contractors will go into the title company to pick up the check, and before they are given the check from the title company, they have to sign a lien waiver, which is important because if you get a shady contractor, they end up being shady down the road, and all of a sudden you build a house, and even though you've paid the guy, he comes back and he says, well, yeah, he paid me, but we agreed upon more of an amount. He's just trying to get more money from you. He's gonna file a lien against the house. You can't sell the house if there's a lien against it. You can, but you're gonna have to pay that lien. So you wanna make sure there is no, company or contractor that has a lien against the house. It's really, really important. So if you can structure it that way, highly recommend it. And then the remaining 3 to 4 draws, you're gonna have one after the framing and rough mechanicals are done. You're gonna have another one after the drywall is done, and one at the finish. Now, when you are requesting those draws, you've obtained financing, you've got a certain interest rate. It's probably around 5 to 6%, I think, for a commercial rate. So you're going to be paying 5% of the total amount drawn 4 to 5 times through the process. So initially, if you request $40,000, you're going to make a payment of 5% when you request that. And then when you take your second draw and you request, say, another $50,000, now that 90 total has been drawn, you're going to pay another 5% on that. So you want to make sure that that is accounted for as well. And maybe you can even structure the construction loan to account for those payments. Maybe there's some type of a contingency line item in the breakdown. And again, maybe this is something that you could, the check at closing not only covers blueprints and building permits, but it also covers all of your payments. And I've never said that before. I just thought about that on the fly. It's a great idea. So that way you're not paying anything out of pocket. So if you can have a draw or a check at closing so that it covers what the total of all of your interest payments are throughout the build, as well as everything else, then you can just pay from there. I mean, I think that would be a great way to do it. So that's how the process works. And then what happens is once you take your last draw, you request your last draw, that's going to expend, all of the money that's in the account, and everything is square there. And now you're ready to sell the house. So that's pretty much how the financing and construction loan process works. So that's, I guess, what I wanted to talk about as far as financing a spec home, how the process works. And not only that, but maybe a couple different options in how you can try to get financing for the spec home. Again, it's not going to be easy, but it's one of those things. Once you get the first one out of the way, now you've got a bank that you're working with, you've got a lender that you're working with, and things are going to be easier at the next go around. Well, that's how the construction loan process works if you're getting financing. And then I just wanted to kind of talk about those couple of potential options for getting financing and how that all works and what to expect. So let me know if you found this helpful. Let me know if you've got any questions or video ideas for me to do. I'd be more than happy to listen to those and do a video from that. I really appreciate your time and watching this. And if you don't subscribe, please subscribe. Hit the bell for notifications so you know when I'm doing a new video. Give me a thumbs up, share. I'd really appreciate it. Have a great rest of the day. Take care.